Good afternoon. It's Friday. It's Red Friday. Every Friday here at Low VA Rates is Red Friday. As a reminder, we wear red because we support the men and women of the military. Red stands for Remembering Everyone Deployed. So if you've got loved ones or family members or friends that are deployed, wear red. Show them that you support them. Show them that you remember them. Anyhow, today we are going to talk about whether or not now is a good time to get an ARM loan. First of all, I hope everybody understands what ARM stands for. Adjustable Rate Mortgage. Now, years ago, when we would talk and educate people about adjustable rate mortgages, we would try to steer clear of the word adjustable or variable, because if you go back to right before the housing collapse and the mortgage meltdown, everybody was getting into loans that the media spun and suggested that ARM loans were what caused the housing collapse. Now, we've had many videos that you can go to our YouTube channel or right on our website and research what really caused the housing collapse, okay? One of my favorite movies is The Big Short. It talks about what really caused the housing collapse, and I'll be honest with you, it was not ARM loans, okay? Even Hollywood knows that when they produced this movie. What we used to think in the past was all orchestrated by what I suggest is media trying to get people afraid of the ARM loan. I'm here to tell you that that is not the case. The ARM loan is an amazing loan. I have one on my own home, and I would suggest that loan to almost anybody in any circumstance. So the real short and quick answer, of course right now is a good time to do an ARM loan. Okay, it is also a good time to do a fixed rate loan and some of the other types of options that are out there. But let's talk now specifically about why I think now is a great time to do an ARM loan. Probably the main reason, regardless of whether or not interest rates are up, whether they're going down, here's a fact, okay? Fact number one, in the United States of America, the average homeowner, military or civilian, stays in their mortgage. Notice I did not say stays in their home, but we stay in our mortgage somewhere between 5 to 6 years on average, okay? Now, I just moved into a new home about 6 or 7 months ago, so I've only been in my mortgage and my new home for about 6 or 7 months. So there's exceptions to the rule where people are in their home for a very short period of time. There's suggestions to the rule where people are in their loan for long periods of time. But in general, this is a fact. You can find this on Freddie Mac and Fannie Mae's websites. You got to do some research and some digging. But if we're only in our mortgages for 5 to 6 years, why are we so worried about getting a 30-year fixed mortgage? You're always going to have a higher rate on a 30-year fixed. If you come to us today and try to get a 30-year fixed mortgage, you're going to be somewhere between 3.25 and probably 4.25% interest. Okay? That's a range. There's a lot of variables that determine where you're going to be there, but that would be for a fixed rate, okay? For a 30-year fixed. Our ARM loans today are somewhere between 1.75 and 2.75. So, which one's lower? You're going to have a lower interest rate, and you're going to have lower mortgage payments, and you're going to be able to afford a larger home, or you're going to be able to put more money into your savings account on an ARM loan than you are a fixed. Now, obviously, as we've talked about in other ARM videos, it's only fixed for a short period of time. The ARM loans that we have here at Low VA Rates are fixed somewhere between 3 years, and we go all the way up to a 7-year ARM for veterans. There are even 10-year ARMs for civilians on conventional loans. So look at this. If you get an ARM loan somewhere between 3 and 7 years fixed, it's fixed for that many years, and we know that in this country, most of us are only in our mortgage for 5 to 6 years, why would you ever get a 30-year fixed? Okay, now I could educate people on why 30-year fixed mortgages are also valuable tools, but today we're talking about the ARM. This is not a be-all, end-all statement. But if I'm trying to answer the question on whether or not now is a good time to get an ARM loan, absolutely. If you're, looking at the overall generality of how we, stay on our mortgages in this country. Now, you may be saying, no way, I'm only going to be in my mortgage for 5 to 6 years. Well, depending on whether or not you're a first-time homeowner or you've been in many homes, do yourself a favor. Pause the video or come back and watch it in a minute and go backwards in time and find out how long have you been in your mortgages. Again, not your home, but your mortgages. why do people get out of their mortgages? Or why do they change them? Well, first of all, lower rates. We've seen interest rates go like this over the last 10 or 15 years. So for the last 10 or 15 years, people have been getting out of their mortgages and refinancing every time interest rates went down. Now you might say, well, Eric, interest rates are on their way up right now. Yeah, you're right. They are on their way up. So why would I get into a mortgage? Well, again, there's other reasons why we get out of our mortgage. Equity. As our home goes up in equity, which is happening across the country right now, as our equity increases, as property values go up, what do people do? They cash out. They refinance to pay off credit cards. We talked about that a few weeks ago. Pay off credit cards that are at, 17 to 19%. They want to move up. Okay. I've lived in my starter home for 4 or 5 years. My kids are getting ready to go to school. I want to move somewhere different. Maybe sometimes we move down. Okay, we retire and we need a smaller home. We do not need the same size of a home that we had when our kids were all in school. So these are some other reasons why our mortgages seem to change. That is why there's a big difference between saying we stay in our homes for 5 or 6 years or we stay in our loans. So I will end here. We like to keep these videos kind of short, and I want to answer some questions. So if you have questions, doubts, or concerns about the adjustable rate mortgage, start thinking about those right now. But I'm here to tell you, in most cases, getting into somewhere between a 3 to 7 year adjustable rate mortgage makes more sense than getting into a 30-year fixed. I was reading an article just the other day. I plan on doing a video on this soon. A video crew here remind me to produce a video on this also. But there's a lot of recent research that even goes into detail on all the other countries in the world and how many more of those countries use adjustable rate mortgages for home ownership than here in the United States. I haven't dug deep enough into that as to why, but interestingly enough, when the mortgage collapse happened and it kind of triggered our country into a recession back in 2006, 7, and 8, Canada did not have that same recession. Europe and Asia did not have the same sorts of situations. So why? Most of the people were, I shouldn't say most of the people, but a lot of people were in adjustable rate mortgages in those countries. And so as the economy here in the US slowed down and interest rates started going down, if you were in an adjustable rate mortgage at that time, well, your adjustable rate mortgage went down with the rest of the market. But I don't want to go too far on a tangent. I love the adjustable rate mortgage. I suggest you research it and look at how it may benefit you. I think we have a question.
Jack is worried that ARM rates are supposed to go up 3 times this year. Is that true?
Kind of true. So Jack, great question. It's not that ARM rates are supposed to go up 3 times this year, but what you're referring to is the Federal Reserve, okay? The Federal Reserve and the federal funds rate. It is very likely, I agree with you, the media's probably got this one right. Unless something crazy happens, the Fed has suggested that they plan on raising interest rates 3 times this year. That is why I did say interest rates, and if I didn't say this, I will confirm what Jack is saying. Interest rates will start to go up, no doubt. However, again, if you get an ARM loan, you're going to be fixed for 3, 5, or 7 years. And so, matter of fact, I just closed on my ARM loan at my home in July. It's a 7-year ARM, and I hope, I shouldn't say I hope, that's wrong. I don't care if interest rates go up for the next 7 years because it will not affect my adjustable rate mortgage because I'm locked in for 7 years. And what history has told us and what the Fed will tell you, I wish we could all go and ask the Fed direct questions, interest rates are not likely to go up, up, and up for 5, 6, 7 years. There's gaps here and there. But again, if you go back to that first fact, does it really matter what interest rates are doing if you're going to refinance before your 30-year fixed ever comes to full term? I get your concern, Jack. Rates are on their way up, but you will be locked in during a period in which rates are going up. And then as soon as those rates start to come down, if you're out of your fixed period, you may actually see your adjustable rate mortgage go down with them. One other thing, the VA mortgage, we have videos on this. Go to our YouTube page and type in low VA rates CMT index. The CMT index is what VA and FHA loans are based off of, ARM loans. The Fed does not control the CMT index. Of course, as the Fed starts to raise rates, adjustable rate mortgages in general are likely going to tick upward. So Jack is absolutely right. Again, I come back to the simple fact of everything that goes up must come down, right? There you go, a little visual. And you're probably not going to be in your loan once it starts to matter. Any other questions?
Don mentions that he agrees. He saved over $400 a month with his ARM. Is that result typical?
I got to be careful saying that anything is typical. When you're in the financial industry like we are, you can't say, well, because this happened, that it's going to happen to somebody else. I can tell you right now, on my particular home, had I gotten a 30-year fixed mortgage, my payment would be well more than $400 higher than the ARM loan I'm on. I actually have a 2.375% ARM, which is pretty crazy. I locked in at a really good time. I guess that's one of the benefits of being in the mortgage world. But absolutely, Don, we've had people save $800 a month. We have somebody just the other day who just purchased a home in Florida. They got 5.25% in January of this year. They're already wanting to refinance, and if I put them into an ARM at 2.25, I can tell you right now they're saving over $400 a month on an average size mortgage in this country. So there's a lot of variables that will determine if going into an ARM loan is going to save you $400 or $40. But again, love the loan. It's got a lot of benefits. And we have other videos out there where we go into some of the downsides and some of the risks. There are some risks involved, but they generally do not outweigh the benefits. So you always want to do that risk-reward analysis. I believe there's more reward in doing an adjustable rate mortgage than there is risk. Any other questions from anywhere? Again, we're Red on Fridays. This is Eric with Low VA Rates. We really would like more and more people that are coming across these videos to share them on their own pages, tag some of your friends in the video. We feel that these videos are very informative and educational, and it would be very helpful if you can spread the word and come back and comment. Let us know if you like the ARM, if you dislike the ARM, whatever it is. And that's it for today.